Hello, hello, hello. Happy Monday, everyone. How is everyone doing? Good morning, Ted. All the comments are jumbled up today, so it's not going to be, it might not be on YouTube, but it is in Ecamm. Good morning, Mark. So I'm going to be jumping around a bit in here. Thank you for putting in all the news. Good morning, Sterling. There was an earthquake in Japan. What else do we have here? Good morning, Patrick. Just trying to get through everything to see where everybody is. Apple's app fees spark more EU scrutiny, and Apple is down. I know that. Pre-market. Good morning, Jacob. Oh, shock. MicroStrategy acquires additional 2,530 Bitcoins. What is their business anymore? Just buying Bitcoin? Because they don't really have a business. So they're just gambling on Bitcoin. Oh, boy. Good morning, Richard. Good morning, Royal Palms. Thank you. Yes, let's have a like for Mike. Uh, what else? Good morning, Tony. What's the news that caused the pre-market dump? I think just because of where we closed on Friday. Inflation expectations. The only thing it's going to be interesting this week is we have the PPI and CPI numbers come out. Unless they're dovish, it could get real interesting. Good morning, Tony. Good morning, Anissa. Good morning, John. Hello, Daniel. Hope everyone is doing fantastic and had a wonderful, wonderful weekend. Let's see here. We have today, remember, also inflation expectations on these consumer sentiment numbers from Friday. Remember, those inflation expectations went a lot higher. Let me see if I can do last week or yesterday. No, that doesn't take me there. Previous week. Here, remember, and we triggered the pattern. So, previous week, we had told you to watch out for that. We had inflation expectations jumping to 3.3 and the 5 years to 3.3. So the short term and even the longer term inflation expectations jumping up substantially. So that is very interesting. Now, today we don't have much going on. We have consumer inflation expectations, and we'll have to see. It's forecast to go 3.1 versus 3. But the numbers on Friday were more important. Tomorrow we have the core PPI, this headline PPI. Then we got some Fed speak. Wednesday is a critical day this week. We have the primary critical day. We have the CPI numbers on Wednesday. Then, of course, we have more Fed speak. Probably telling us to don't worry, don't ignore, just ignore the CPI numbers. Everything's perfect. Thursday, we do have retail sales and jobless claims. So retail sales is an important number, especially for December. But I put Wednesday would be the higher priority day. And then Friday, there's not much. We have building permits, but really winding it down on Friday. Today, we have your mega caps all down. UNH is up. Healthcare is up today, but things like NVIDIA, Apple, Broadcom, Tesla, everything's down. We're getting some selling pressure if we refresh our groups. Energy is the only thing slightly up, and followed by utilities. But that everything else is negative. Besides that, Fed watch. This is interesting too. Now look at this. Well, remember, we have the Fed meeting in 16 days. So a little over 2 weeks. So not next Wednesday, the following Wednesday. And you can see here, a Fed pause through July and only one cut priced in for all of next year, starting in September. So one cut priced in starting in September. Very interesting there. Fear and greed were almost to extreme fear. But again, look at the stock price strength and look at the breadth. The breadth bounced a little, but this is not strong. PE ratio is still right about 37. With that, earnings. Remember, KB Home was rescheduled from last week due to Carter's funeral. That's Monday after the close. Citi, Wells Fargo, BlackRock, JP Morgan Chase really start to kick off the earnings season on Wednesday. Then we have Morgan Stanley, Goldman Sachs, UNH. Thursday, we also have TSMC really kicking it off on Thursday. Not much after the close, and Friday's not a big day. So Friday's a very quiet day this week. So Remember, we have CPI and some key earnings on Wednesday, and retail sales and more key earnings on Thursday. That's where we sit right now. Yeah, we have Moderna also down. But what happened now? Friday on the S&P, 58.66. This closed at 58.66.25 was the official settlement close, which I was sort of surprised at because I thought it was going to close a little lower based off this close, but the official settlement did technically not trigger this. This could be turning into a channeling double, especially with cycles on the weekly getting to bottom. But what's so fascinating is they're not turning up yet. We have all those inflation numbers coming out this week. So coming into a very key level of support, the prior to the election support right here. Remember, here's was Tuesday the 5th, and then Wednesday when Trump won. So you have all that, and this is some major support. So we're entering major support and a bottom of a channel line. Now that's copied from the top, and I do it from the candle bodies. So we're entering a very key level of support right now. But if this breaks 5,800, we'll get about 57.45 to reconnect with the 200 simple, which the last time we reconnected with that was back at the 5th of August when we had this sell-off. So this is going to get very interesting if we do break 5,800. 57.45 is very, very key for me. Now, on the upside, let me clean up a couple of these lines. Very major resistance. Remember, we've been in bearish mode since the 18th, at least on the daily. I have been. But still potentially bullish mode on the weekly. Now, last week, though, what did we do? We closed below the rotation zone. So that put me in neutral on the weekly, which means from a longer term perspective, I'm balanced. I'm watching for both buys and sells on a weekly time frame, but on a daily sell program, I'm still watching. I'm favoring sell signals. I'm favoring the sell side. So on any bounces, I'm more aggressively looking for sells. We have the declining rotation zone. So, and this is not for today, but about 59.20, 5,900 to 5,920 is the major key level of resistance now at this point. We'll be watching today's high. That is going to be key in the short term, though, for the next couple days. 58.67.50. Why? Right near Friday's close, the high, because if we take that out, I could see that pretty quick bounce, snap back to 5,900 at least. And then if we start going through that, we have the top of the channel where we've been making lower highs. So that's what I'm looking for right now in terms of your little short-term levels. If we do snapback rally today, very key area is right about this 58.75 to 58.90 for any resistance. If it does bounce back stronger today, I don't know what would cause that, but that's where we sit. In terms of the NASDAQ, also the NASDAQ last week closing in the rotation zone, so the NASDAQ barely remaining in slightly bullish mode, but the daily is still in bearish mode. The NASDAQ also, got to double check this one, did not trigger the double officially. It confirmed but did not trigger it. Very, very key support trading against there now. This 20,800 where we're trading right now. We've dipped a little below it, but that's what I'm watching for. If we come back down, the next key level is 24.55 roughly, and to reconnect with the 200 simple is 20,300. Again, I will be watching based off the daily for rollover plays on any bounces. So we've taken a look at that and looking at the shorter term. The key resistance, using the major resistance is now 21K. Oops, I'm clicking all over the place. No, you cannot make, without a losing day, no, it's not possible. No, you got to learn to accept losses, and not every day you should be trading. There's not even going to be a trade every day, and you're not going to look. For example, remember last week we had a double that hit the first target, turned around, and got stopped out. So it hit the first target. Unless you, even if you took partial profits in the first target, you probably took a loss on it, or a partial loss. Doesn't mean you're not going to need to take a full loss, but you're going to have losing days. It's the point of trading. You have to learn to accept losses. The Dow retapping the 200. We'll be watching this. If we get up, some of these might be setting up for percent beat buys tomorrow, but that would just be pops into the rotation zone. And the major breakdown areas for the Dow is about 42,440 for any potential rally, then 42,700. Okay, we're trading against the key harmonic now. If the Dow does keep going, because this was sort of a sloppy head and shoulders, we could easily at some point get down to 30, just below 40,000 again. Not right away. The Russell, remember, triggered the double, rallied back, and produced two tops here, and then rolled over, could not get above the rotation zone, and now has hit the second target. Now, the Russell still could get down to this 20,137 very easily. Very major resistance in the Russell is 2225, 2226 area. The prior support from the 200 simple and the declining rotation zone on the daily. It doesn't matter. You're still going to have losses, Dark Screen. You got to learn. If you're trying to chase no losses, you're chasing the wrong thing. VIX is now getting more into elevated territory, but not broken out above this 23 level. That's where I'll really be starting to sit up and take notice if we're going to get into significant downdrafts. The DAX, we still have the potential double top in here. Long way off from triggering. Very key, though. Very key is this support 20,175. We're back above it, but if we close back below that, I'll be watching for a retest of 50. And if we lose that on a closing basis, probably triggering the double. The notes, trying to find a bottom in here. We do have some divergences in here. Again, the now very key resistance area is about 108.04. We're against the harmonic. We'll be watching for a pausing bar. Now, it's going to be interesting because we got those PPI and CPI numbers. The yields, very key support back at 4.7. So on any pullback, going to be watching that. Again, PPI numbers tomorrow. And we're in a very significant potential area of resistance from the October 23 high areas. Would not be, unless the inflation rips, okay, and then we plow through that. I mean, the trend is still up, but would not be surprised to possibly see some consolidation once these CPI and PPI numbers come out, consolidating up here. But we will see. Again, trend is still up in that. Dollar index. The double, by the way, off the table. Potential double. Again, we closed above the 62.5. We are getting back to very overbought conditions, but now your support level, is coming in about 109. That's the first level support. Then you're looking at about 108. So those are your two major support levels. And on a weekly basis, we are getting very overbought with cycles at a top. So it's definitely not looking to establish a lot of new longs up here. It's trailing mode from a dollar standpoint. Crude. Futures edge should drop hopefully today. That was recorded last week. As I said on that, which you will hear, I am looking for at least a topping area up here because we're in major consolidation against here. We just don't have one yet. What's interesting now is major support is back at 75. So crude has been really running higher. into very key resistance. Now, if we start breaking, it's going to take a break above 80 to really have me sit up and take notice from a bullish side, although this is run pretty far, pretty fast, and we are at getting to weekly cycle tops. So that's why I'm starting to watch for at least a short-term topping pattern. Natty Gas, quick, major gap up to new recent highs and a reversal. Natty Gas, is the volatility in this has been insane recently. Very tough to trade. Gold, remember we hit the target on the double. Did not close on Friday above the 62.5 and getting a pullback into key support area. Remember, I'm watching for a longer term bottom in gold coming up over the next couple weeks. But we finished that little double play and now going to be watching to see if we hold this 2670 area on a pullback. Silver, I did tweet that out on Friday, hitting the final target, the 62.5 and the final target from the double, which is completed, not closing above the 62.5 and a big reversal on silver. And silver is actually trading right now below key support. So the doubles played out. I'll be watching for a more significant bottom in silver, but we're at daily cycle tops and we're rolling over. And on the weekly, we're trying to still build something else. So I am not in the short term, unless we maintain on a closing basis above 30, 40, I'm still looking for a pullback, at least in the short term. Yen, coming into some very key support. Now, yen, we're rolling over on the weekly, so we could easily pull back to the weekly rotation zone. But in the short term, very major support right around this 156.50 area. Euro, not much to talk about there. The doubles are off the table in that. Right now, I'm watching this 101.88 level on a closing basis, because if we close below that, then it's lower for longer. I'm still expecting us to retest parity, which is right around the 75% harmonic, but we'll be watching potentially for a bounce move first. Spiders did trigger the channeling double on Friday. The key targets here. First off, I'm using 576.74. That was my first support to refill the gap from the breakaway gap from the election, and we're trading below that now, so this gap's going to be filled. So that's turning into short-term resistance, and on any rally, the two targets for me, the two bounce targets, are 578.55 and 580.50 roughly. The first major target area, since we have very key support right in here, you see this base from October, and from the end of October to the beginning and end of October, I would watch in this area right around here, right around the first target double, but I'd be looking to at least lower stops from any shorts right around 568.60 area, right in front of that double target. So the Qs did not trigger, confirmed, but did not trigger the double, but we're gapping down today. Right now, my target's roughly 500. We're trading 501.43 to the downside, then 492, 493. To the upside, your key resistance is 503.92, then 507.19. Rich says no rate cut this year will be very bearish for gold. They still got one priced in. We'll see if that goes off. Oh, I did not see it. NVIDIA's top customers face glitchy chip racks. Interesting. Am I bullish yen yet, Mike? What are you talking with, the underlying or the futures? The underlying, I'm still in the trend is up because we didn't tap out the 87.5 yet, but I'm watching for to see if this pullback level holds. No, the Fed will not get it right. That's my short take on that. RSP also on Friday, breaking down the key support. We're going to look like we're going to test the 200. which we haven't been in connection with since back in November 23 when we broke out. So that is going to be interesting. Longer term on RSP, I'm still looking at 169.83. We'll look at a couple other things. NDXE, again, the double that never triggered. It confirmed but never triggered. We're trading against a triple bottom right now that looks like we'll probably break below it. So, again, not a lot of bullish stuff out there yet. Tesla looks like we're going to be trading just a little lower, but I'm watching to see if we lose the 50 EMA, which is coming in about 370. We do still have a potential little double. NVIDIA, we do have still the weekly double top, and the rotation zone would be out of the way, and the key trigger for that is a weekly close below 126.86. So even if you're not trading that, keep an eye on it. You have the daily double top in Broadcom. The trigger point on that is a daily close below 217.58. And that could run it all the way back from the breakout move with earnings. Apple, very bearish day on Friday and a little buying back to put it back above key support. But look at this. Friday's low was 233. We're looking to gap down and test Friday's lows. It's lost all the major support. I'm still expecting Apple to reconnect with the 200 simple over the next few weeks. That's not to say there won't be bounce rallies, but look, the rotation zone's against it. It's lost the 50 EMA. And last time this connected with the 200 was back in May 6th when it broke above it. And that started this key rally. So I'm still watching for a reconnect and going to be watching this 220 level. Would I wait for 5,800 to break for a short entry on ESN or a daily close on the pattern? You can do a daily close on the pattern, but what I'm watching for is some rallies. Because this could take a little bit of time to roll over. So on any pops, looking for rollover patterns. What else do we have here? That's where it sits right now. So, not much else to talk about. It's going to be a very, very interesting week. And then remember also, after this week, next week really gets into the heart of earnings. So, can earnings save the market? Or we're going to have another 2 to 3 possibly volatile weeks to wrap up January. So I would not get complacent during this time frame. All right. That's where we sit. I got to wrap it up for now. I will see everyone back tomorrow morning. Bye for now.